Habari za Njori, Johnson.
Habari yako, Mashudu.
Hi, Johnson. Thank you very much. Now, thank you so much for joining us this afternoon. Now, looking at the volatility that we are seeing on the market, quite volatile this week. What did you make of trade?
Well, at least today we saw some foreign investor appetite rising. I think the stocks had the drop. We've seen quite a bit of correction since Monday opened. Basically, a downward trend. Perhaps some investors took the opportunity to take some profits, but then it turned up again further on. And today again, I think the foreign investors saw opportunity and started buying a bit. So perhaps it was a short turn down, but hopefully next week we'll see a pickup again.
Pick up again next week. But looking at some of the results that have come out, we had Rio Vipingo out with results yesterday, posted a 33% first half pre-tax profit rise to 302 million shillings. What were your thoughts on those results? We saw Sasini Tea didn't really impress on their results.
Sasini had probably pricing issues, so the future valuation of their biological assets dropped, I think, in line with the expected drop in prices. Rio Vipingo had a different set of results, so upward profits turned up, perhaps in anticipation of a drop in the value of the Kenyan shilling, and possibly good results going forward. But also supported by the performance in the last 6 months.
What about Rio Vipingo? What did you think of their results?
Good pricing of Sisal, of course, helped. Perhaps okay, the shilling is not helping at this, or didn't help over the first 6 months of its financial year. But again, future pricing could get a boost from a weaker shilling. I think they manage their costs well, so not really looked at it in depth, but so far we like what we see.
Now looking at
it's also trading.
No, you can carry on.
Sorry. I was saying it's trading at a fraction of its book value, low PEs, so it's a very interesting share to look at right now.
You touched on Sasini Tea's valuations as well as Rio Vipingo, but when you look at the sector as a whole, which stock would you be buying into at this stage?
Interesting question. It really depends on what perspective you're coming in from. If you're a long-term investor, I would buy probably almost all of them without thinking. But for short-term trading, I'd keep watch of the interest rates as well as the Greece situation, primarily because some of our exports are to Europe, and that will affect the performance of these companies in the short run. But in the long run, I think they're still discounted.
Looking at CFC, Stanbic and Cooperative Bank out with results on that front. Pretty impressive, really following the trend of some other banks that have released, like KCB. What were your thoughts on those results? Did they meet your company's expectations?
Well, one thing we know is banks rarely lose. When interest rates went up, they pushed theirs up faster than their borrowing costs or their funding costs. So we saw margins there improve. At least the difference between interest income and interest expenditure rise up sharply. But of course, the rise in funding costs the growth was much faster. So that gives us cause for concern. Of course, again, inflation pushed up costs of doing business for the whole banking industry. But so far, so good. I think one thing that goes for banking in Kenya is also good capitalization, and that gives helps stabilize in times of volatility.
Now let's touch on a bit on the shilling losing some ground in this week's session, with foreigners really exiting the Kenyan markets looking for higher yields. This likely to put a pressure on the shilling and the economy as a whole, would you say, going forward?
For me, I thought it was actually a temporary thing. We're still waiting for the inflation numbers in next week. Hopefully that will give the shilling some boost, because even though nominal rates are coming down, real rates are probably staying positive, and that's a good thing, especially in a world where most real rates are negative. So and I think for me the biggest concern was flight to safety. I think that was the theme or the chief reason for the drop of the strength of the shilling, because everybody wants to hold either dollar denominated assets or safe assets, so that moving away from Kenya, basically traders were cutting their risks. But we hope that a further drop in inflation numbers next week will help the taking risk in Kenya make taking risk in Kenya worth it over the short run.